Well, thank you so much for joining us here on the Market Day Report. I'm Marlon Bowling with you with a look at your ag commodity trade here. And we are going to go to Chicago and visit with Todd Bubba Horwitz of BubbaTrading.com to get his take on what we're seeing for this segment in the grain trade. Let's go talk with Todd here right now. And Todd, as we take a look at what's going on in the grain trade so far this morning, it looks like a softer tone in the corn, a little firmness in the soybeans. Let's go ahead and take a look at our futures trade. Here on the corn board right now, we are down 1 1/4 in December. We're down at 346 3/4. July down a penny at 376 1/2. Now, there was news overnight, I understand, that we had sold another 130,000 tons of corn to unknown destinations. Gosh, that sounds familiar. That's the exact same thing we reported yesterday. So anyway, and it looks like another batch there, but again, the corn selling off instead. Now on the soybean trade, we'll flip over there and we have January soybeans 3 3/4 higher at 997 3/4, and March is still above $10 at 10.08 even per bushel now. We're up 3 3/4 cents. So why the disparity here, Todd, between the corn and soybean trade this morning?
Well, Marlon, I think it's really a money issue, and I'm not surprised that corn is a little bit lower. I think 345 is a pretty good spot to step back in and buy it. But again, these overnight sales, they don't mean anything. They've already been accounted for. You know, somebody always knows something, and of course, we're in this malaise period of trading where the markets aren't really moving much at all regardless. So, I mean, we're really in corn, you know, 345 to 355, if even that high. Maybe it's only 350 now, but we're not going anywhere anyways. There hasn't been any real reason to sell it, and there's no real reason to buy it here, except that I like to buy it at 345, and I think the same goes for soybeans, but we did manage to get back into that, over that 985 level, and now we're kind of like 985 to 10, and we're kind of working in that range. So what you're really seeing here more is more range-bound markets that have no real impetus to push out. Now, maybe Thursday's report will help us push through. Probably not. It looks like we may stay in this pattern until the equity markets sell off, and then it brings some new money into these markets. That's more what I'd be looking for.
Okay, so I'm glad you brought that up about Thursday's market activity, because USDA will come out with their crop production report. Also, the WASDE report, or supply and demand report, and we have the early estimates based on a Wall Street Journal survey. And for the production on the corn, we can take a look here. The average trade guess is running about 172.3 bushels an acre. That would yield a total production of 14.32 billion bushels. And on the soybean yield, it looks like the trade expects that to come down a little bit from last month, down to 49.2 bushels per acre. That would mean a soybean production of 4.4 billion, and that's what the trade is looking at. I want to get your quick thought on the wheat trade here too, Todd, before we run into our break. On the wheat futures right now, as we look at Chicago, we're down 5 1/2 cents at 425 1/4. On Kansas City, we have December there trading at 424 1/2, also down 5 1/2 cents. And then Minneapolis wheat on the spring wheat trade, we have December down too at 629. Just for good measure, I'll throw in cotton here while we're at that. We have the December contract down 47 points there at 68.38. Real quickly here, Todd, on the wheat trade, why the pressure today?
Well, I mean, we had a big rally yesterday. Again, it's really hadn't gone anywhere. It's just kind of churning back and forth, down near the lows, get a little bit of a rally, down near the lows, get a little rally. Look, I'll be honest with you, I'm a buyer here, and I think this is the best buy in town right now, these wheat markets. And, of course, we said cotton was a pretty good sale, probably around 70, which it was. So, again, that's just based on the money flow. I'd be a buyer down here at wheat at about 424, 425, somewhere around there.
Yeah, so far it looks like you pretty well pegged it on the cotton market. All right, Todd, we'll take a break. We'll come back, and we'll talk about livestock when we come back in just a moment. Don't go anywhere. Thanks so much for joining us today. I'm Marlon Bowling with you, and we're watching your ag commodity trade. We covered the grain side. We're talking right now with Todd Bubba Horwitz, and he is with BubbaTrading.com in Chicago. All right, I want to focus on the livestock trade. Let's take a look here, Todd, at our live cattle futures board. And right now, more pressure again today, led by the December contract. It's down $1.02. We're now trading at 124.30 per hundredweight. That's off its earlier high today by $1.30 now already. February down 87 cents at 129.78, and the April down 65 at 128.75. Let's switch over to feeder cattle. How's it doing today? Well, similar action. In fact, here, the November not down as bad as the other months. However, it is November, so keep that in mind. January, down $1.02. We're at 159.85 per hundredweight, and the March down 136 at 156.72. So that is about $1.50 off our earlier high today. Todd, what kind of caution signals are you looking at when it comes to analyzing this cattle trade here today?
Well, you know, when you and I talked over the weekend, I told you I felt that we were going to be under some pressure, and I think this is going to continue. I would look for fat cattle to go probably back under 120 before I'd even think about stepping in and being a buyer again now here. I think that I think that last push in the rally was too much, and I think that's going to create a tremendous amount of weakness as we push our way down. And the same goes for feeders. I'm not a buyer in feeders right now until they get back around sub 150, believe it or not. So I think there's going to be some pretty heavy selling coming in. I did not like the way last week ended with those major rallies, or what we would call in the business a blow-off pattern. It looked more like a panic-driven rally versus an actual rally based on supply and demand and based on some good things. So I would look for some pretty heavy selling to come in here, and again, there'll be a little bit of rallies, but I'd be a seller of every rally now until we get back to those levels unless something changes.
Ah, really? Okay, let's take a look at the lean hog trade then. And on the lean hog futures there, they have been struggling for a few days, and we have more pressure again today. Right now, you have your December contract on the lean hogs down 77 cents. We're at 63.85 per hundredweight right now. We have the February down 47 at 71.75, and you have April 48 lower at 75.12. Now, this is a market that, Todd, it has been really chopping around sideways here for a better part of a week right now. What do you think the future holds here? Have we seen the top now for a while?
I think so. I think you see a print in the 50s, Marlon, probably 57 or 58, and that's a good place to want to step back in. Again, they got a little bit too carried away here. The buyer stepped in and pushed a little bit too hard, and of course now there's nobody left to buy them right now, and I think you continue to see the heavyweight push down here. And again, I would expect to see a little bit of a bounce of a 60, but at the end I look for 58 or so to step back in and want to be a buyer. I mean, I love all the complex, but I do want to see some pressure before I want to step in.
Good to visit with you, Todd. Appreciate that. I do want to, we'll let you go for now. I do want to take a look at the U.S. dollar value and the crude oil, too, while we have a chance here. Getting you updated on the dollar value. On the December futures, we're now trading 280 points higher. Yep, higher at 94.940. It did get as high as 95.070, so keep that in mind. Crude oil trade, that had a big move yesterday, and right now we have December down 17 cents on West Texas crude, but wow, it's still over $57 at 57.18 per barrel. A quick look at our heating oil market will get you updated there. And the diesel fuel market that is traded in heating oil is down 1.4 cents right now on December futures, and it is trading at 192.8 per gallon. With that, Christina, I'll turn it back to you.
Thank you, Mark.